Let's go over this real quick, guys and gals. I'm going to break this down for you new traders in the room. Okay, this is one of the top setups in the trading room. All right, we've been doing this, like I said, since the trading room has been open. What we are measuring is we are measuring the top inflection point for a breakdown or breakout in the market in crude oil or also the euro. And what we like to do is we like to look at these green dots and these red dots for possible breakdowns and breakouts that could produce a 40 to 60 tick trade on oil for us. So how do we do the trade? The first characteristic is you must be in a downtrend on the 5-minute chart. The 5-minute chart has to be in a downtrend if you're looking to short. If you're looking to buy a breakout at the red dots, you must be in a 5-minute uptrend. So trend is comprised of this big moving average over here on the 5-minute chart. That's my magenta moving average. If we're at a 35 to 45 degree angle, that's categorized as a downtrend. You don't want to take any buys at all. You don't want to counter trend trade the market. Counter trend trading. So we don't want to do that. We want to look at the trend is down, and what we want to do is we want to look for a continuation to the downside if there's spread between these moving averages. If we have spread, spread equals bread, right? So we want a spread. It looks like a car or a train track driving right down through the middle of your chart. You got spread between the short-term and longer-term moving average. Indicates weakness, but that's not good enough. Two things you can do in a hard downtrend. You can look to short retracements. The first retracement came at the natural target of LVA. First retracement to the magenta moving average. That's our first target, natural target for a continuation pattern. If there's spread, the first test of it, you look for continuation. That's one of my top setups in the room also. So we know that's set up by heart. We know the 2-minute after spread, a retracement to the magenta is one setup. A retracement to the magenta on the 5-minute is a setup. But let's talk about one of the biggest setups in the trading room. This produces between 40 to 60 tick trades. And it's a continuation pattern with a small stop. How can we take advantage of this? Well, you want to have two moving averages that are crossed down with spread. Then all you want to do is look at the green dots and the red dots. If you're in a downtrend, you just have to look at the green dots. Okay? This is brand new LVA. It has not been poked through, TK. New LVA. So once you see the new LVA, okay, and you want to see where it's at, look to your right, 87.41. 87.41 is what? Is the order flow. So we know 87.41 is all the institutional order flow. We know that's where all the volume's coming in. So we know that's where all the stops are going to be. So if we know that's where all the stops are going to be, we want to look at that. That's where this eclipse is over here at the A9 tick. I'll see where my symmetry dot is, my next symmetry dot. If my next symmetry dot, which was right here, is at or below the green dots, what I want to do is wait for a 2/3 candle close or a close below right here. A close below the blue symmetry dots. There it is. Okay? Your first target is going to be the first set of symmetry dots. The second is the natural target, second set of symmetry dots. Okay? The overall target will be your 5-minute target or your 2-minute target. You want to see where your next rollers are. Until I get a new market profile, it's suggesting price is going down to 86.32. If I don't see any roller on the 2-minute, or if I don't see any roller over here on the 5-minute, I got this going all the way down to 86.32 on a trade. So not only do we get the inflection short with a small stop, this stayed in with the 10-tick stop on oil. So you got a $100 stop, and you're already up right there again, 40 ticks, just like that. These trades go between 40 to 60 ticks, and they happen every single week in this trading room. Every single week. Okay? It's happened over 2 years now in the trading room. Actually, 2.5 years. Same exact setup. And the reason it works over and over and over again, it's not my opinion, your opinion. It's looking at the exact order flow of the institutions. I know exactly where they're placing their order flow. And once that is violated, you get a hard move to the downside or hard move to the upside. You have a high probability trade. Okay? And sometimes when it breaks, like this morning, if it got through LVA and you got your first runner off, who cares? Make sure you have a stop in off your first target so you have a break even on the second trade. If it wants to go back up on you, you can stop yourself out on the first target. So it doesn't matter, TK, if it does break and goes back up. You've got to have an ATM strat, right? Okay, so the key, guys and gals, I repeat this, we have done hundreds and hundreds and hundreds and hundreds of trades in this room. Okay? Hundreds of trades of this exact setup. And it happens over and over and over and over again. The easiest way to recognize it is it must have 5-minute train track trend. Right? If you're in a downtrend, you only will look for symmetry dot breakdowns, not breakouts. Now, what will happen is once we do get another new market profile that comes up and we get inside of LVA, then we can look for breakouts, right? I mean, we can look for a counter move back up to the upside. But until then, I got nothing but space below me. I got nothing but 86.32 target, nothing over here on the 2-minute, nothing but space, 86.32 all the way down on the downside also. Hey guys, let's do a morning recap from the earlier trade. You can see over here, we had a big breakdown right here at the LVA, low value area. This is market profile right here, okay? Market profile, the two most important dots in the trading room are the green dots and the blue and the red dots. In a downtrend, the moving averages are in a hard downtrend. They'll be parallel with each other. Looks like a car driving down to the middle of your chart. You want to, when you are reached at the green dots, you want to look at a close below the symmetry dots on the 89 tick, okay? So the entry, let's look at the follow through. We had a beautiful follow through. Add this to video 1, and then I'll switch this back over. Right here, the close below the symmetry dots, 2/3 of a candle where the arrow's at. That's your entry target, okay? I said the overall target would be all the way down until we reach one of the two rollers, the 2-minute roller first, and then the 5-minute roller second. So we had a 100-tick move from the symmetry dot break. Then we had another setup that just happened a second ago. Okay? I said there would be two possible setups. A retest of the LVA, low value area at 87.13, or a break of 31 right here, the symmetry dots, because 32 was the main 5-minute roller. And the symmetry dots were at 31, so it's at or below the 5-minute roller. A close below the 5-minute roller with the symmetry dot break, okay, would be the entry. So the entry on the 89 tick was right there where the arrow is. And we had a beautiful another continuation to the downside that you traders got on. Okay, so we had two really good setups with the symmetry dot break this morning. We had the earlier one all the way up here. Look at that. Look at that breakdown right here. LVA breakdown. Look at that breakdown right at the symmetry dots. Small stop. Had a huge hole in the market. Big giant hole in the market. Nothing holding us up. These are the trades where you get 40 to 60 tick trades. This one did over 100 ticks. Then we come down to the roller. We're not looking to buy the roller. We had another possible setup of a retest of 13 to go short off of a retest of LVA. Low value area market profile, or a break of 31 because the symmetry dots were at 31, and right at the roller for continuation. And there's your continuation short. All right?